Hello guys and welcome back to Soji Forex. In today's video we want to look at how to trade Boom 1000, and not just trading it, we are looking at selling Boom 1000 specifically without a fear of spike for 15 minutes. How we can trade Boom 1000 without a fear of spike for 15 minutes. Before then, I want you to know that nobody gets paid in trading for the type of strategy you use. You only get paid in trading for the numbers of trades that were able to go in the direction of your analysis. So having said that, it is possible to be a scalper, to be a day trader, and it's also possible for you to be among those guys who have the mindset to hold trade for a number of days. So it depends on what suits you. It depends on your appetite. So today, let's look at how to sell Boom 1000 for 15 minutes. So let's go to our chart. Here we are. We already have a running trade. Okay, and I will explain. This is not the requirement for entry yet, but this entry is made for a reason. Now, what do we do? First of all, we go to our H1. Coming to our H1, we want to identify what is the trend of the market. And from this scenario, we can see that the market is making a higher low, higher high, higher low, and a higher high. And if we should draw our trend line, it is clear to us that we are in an uptrend. And we follow our indicator. Basically, we said whenever price is above the upper band of the moving average, such as we are having here, it means we are in an uptrend. So we should be looking for opportunity to buy. But regardless of the direction of the market, we can still trade for 15 minutes using this strategy. We have established from our H1 that price is at the upper band, and not just at the upper band, is piercing the upper Bollinger Band on our H1. And we know we are in an uptrend, which means we are not meant to hold the trade for a long time. Then we'll move to M15. Okay, now coming to our M15, we want to establish if price is piercing the upper Bollinger Band. And here price is piercing the upper Bollinger Band. After this, we will now move to our M5. Here we are. So on an M5, we want to see the same thing. Price piercing the upper Bollinger Band. Of course, oh yes, price is piercing the upper Bollinger Band. So our entry is on M5, but you can still move to M1 to make your confirmation. Is price piercing the upper Bollinger Band? Oh yes, price pierces the upper Bollinger Band. If this is confirmed from the 3 place, the next thing we do is that we'll make our entry. You can choose to make your entry on M1. Immediately when price closes below the moving average, then you make your entry. Or you come to your M5. On our M5, we are waiting for price to close below this moving average, which is moving average 10. Once price closes below it, we'll make our entry, and our stop loss is going to be at this previous high. And our goal is for us to take this trade for 15 minutes. Now, the reason I make this early entry is because looking at the chart, you will see that the chart is making a higher high, but our indicator window is making a low. We are seeing higher high, but here what we are seeing is a lower high, lower high. That is what we are seeing. And the indicator window is giving us a divergence, which is opposite of what is happening on our main chart. And for that reason, we confirm this entry. That is why I make this early entry. I made that early entry based on divergence, and for the fact that it is as well at this zone, piercing outside the Bollinger Band. Alright, now having established that, another factor for entry is that coming to our indicator window, we want to see that price, we want to see our green moving average, which we are seeing here. We want to see this green line making a shark fin. This indicator window is a trader dynamic index. We want to see it pierces through the Bollinger Band. The blue line is the Bollinger Band. We want to see the green pierces out of it, and let there be a shark, like a diving of a shark back inside the water. Okay, let's assume it's our fish, and then we want to see our shark diving back inside the ocean. So it pierces out of this Bollinger Band, then we'll see it return back inside. This dive inside, crossing the signal line, which is the red line, give us this entry, which is what we have here. Okay, our entry is set. Price just closes below the moving average, so we are selling, and our stop loss is at the high 141.33. 141.33, 141.33. Good. So here is our stop loss, and here is our entry. Alright, so we'll take this trade comfortably for 15 minutes. Even if a spike, we already have our stop loss. But let's count the number of times this has happened. Now this is 1 and it holds, right? Look at it here. This is 2 and it is valid, right? This is 3 and it is valid. We are now back testing. That is 3. Alright. This is 4 and it is successful. This is 5 and it play out. This is 6 and it plays out. Why? What happens here? We have a divergence here and here. So the divergence is a double entry. Okay, there is a special video on divergence. You can go through it on the channel to get more understanding of what divergence is all about. We already have 6 of these that plays out. Here is another one. 7 consecutively. 7. Okay, here is another one. 8. Even this play out. 9. 10. 11. Now we have 11. This did not play out. Out of 11, 10 played out safely. Only 1 fails. So this has a high profit probability. It's a very, very good and profitable trading strategy. We want this to be up to 15 minutes. Then let's see how much it will give us. What is going to be our profit based on this lot size? They will multiply it by the number of times that we were able to get a successful trade from our 11 trades. We lost 1. We'll make 10 from our back testing. And then let's see how much, if you can focus on this, how much will you be able to realize trading this strategy alone. But before then, let's go into setting up our indicators. And please, all we need you to do is support what we are doing. Subscribe to our channel. Click on the subscription button. Turn on the notification bell so you'll be the first to get notified whenever we publish our next video. And also, very important, like the video and share with your loved one. We are not asking for too much. Support what we are doing if you are gaining value from this video. So let's share with you the strategy First, our main chart, we have indicator window. Our period is 130, deviation is 2.0. Apply to close. You can take a screenshot of this. Then the other one is exponential moving average 10. Just take a screenshot, then you do the setting. Our indicator window 1, this is trader dynamics index. The first is moving average, period is 13. You apply to close. The style is 1. Let this background, the pixel, let the color be the background of your chart. Okay, if your chart is white, make it white. If it is black, you make it black. And here is our level 50, 32, and 68. Then we have our moving average. Period is 2, shift is 0, method is simple, previous indicator data. Then the color is green. The second one, period is 7, shift is 0, simple, apply to previous indicator. Take a screenshot of this, and then Bollinger Band 34, deviation 1.619. First apply to first indicator theta, and the last but not the least, moving average 34. Period is simple. So this is our setup. I'm going to pause the video and we'll come back to see the outcome of the trade. Okay, now it's already 15 minutes, and then let's go back to our chart and see what we have got. Wow, you can see that it played out for 15 minutes as analyzed and as predicted. So now let's see how much we've got from it. Okay, 2.53. Now let's go to our calculator. Here we have our calculator, and then we have 2.53. From our backtesting, we took 11 backtests and were able to get 10. So 2.53 times 10. Wow. Which means if you were able to take 10 of these trades in a day using a lot size of 0.2, you'll be making $25.03. Is that not profitable enough? Check it out. Okay, and then let's assume that we took 11 and 1 go against us. So let's assume the one that spiked against us gave us minus, let's say minus 7. Okay, give us minus 7. We are left with 18.3 cents. Okay, so if you are to make 18.3 cents every day in a week, we have 7 days in a week, so let's say 18.3 times 7. Wow. So which means that in a week you've ended up making $128. Then in a month, how much is it? Times 4. Wow. That is $512 in a month. Just following this simple strategy and practicing it, getting used to it, will give you $512, 4 cents in a month. I believe this is now making sense. We are compounding. And then here we are back to our chart. So please have a special announcement I want to make, and it is still going. We will be doing a very serious program in the month of April. And what is the program? We'll be having a trade challenge in the month of April. Okay, this trade challenge is for those trading derived synthetic indices. And every Saturday of the month of April, starting from the first Saturday, we'll be having a trading challenge. There will be a trade call from the opening of the market, 12 schedule the next deal within that 24 hours. The requirement is for you to just get your account funded with a $50. Then there will be a link in the bio of this video. All you need to do is click on the link and join the Telegram group where this challenge will be taking place. And do not forget to like, don't forget to subscribe to our channel, share this video with your loved ones. All right, see you in the subsequent video.